Hey everyone, it's Kenton Becker, American Pacific Mortgage. I'm here to talk about a new rule that is going into effect across the entire industry. And it's actually going into effect this week, March 10th. A lot of lenders honestly have already adopted these new rules. Some have just kind of held out as long as possible. The topic I want to talk about is something called loan level price adjustments. I know, boring term, right? LLPAs are what they're called for short. These loan level price adjustments are pricing to interest rates kind of behind the scenes. It's specific to conventional loans like Fannie Mae, Freddie Mac. So if you're getting a conventional loan, these adjustments could actually impact your rates or your pricing. Now, in some situations, this actually may be a positive impact. In other situations, it could be a negative impact. So I'm going to explain some of these differences so that you know how it could impact you specifically. Honestly, I'm kind of calling this year the year of the first-time home buyer because a lot of these price adjustments are actually beneficial to the first-time home buyer or those that are putting a little bit less down payment. If you're in that category, a good credit score, conventional financing, and you're putting less than 10% down, you're not really going to be impacted by any of these adjustments, and actually it may improve your interest rates or your pricing, which is a great thing. Also, if you're a first-time home buyer that makes a certain amount of income or less, you will not be affected by these adjustments either. So the whole idea is that Fannie Mae, Freddie Mac, conventional financing is really trying to market and make adjustments for more home ownership and more affordable home ownership for new home buyers and those with lower down payments. Now also, if you're purchasing a manufactured home, all of these adjustments that could impact your interest rate, they're all waived. They don't apply to you. So again, more affordable homes like manufactured homes are not going to fall into some of these adjustments. So at the end of the day, what are we talking about with these adjustments? Well, if you are somebody who has purchased a home before, you're using conventional financing, you're putting 20% down, you have a high credit score, yeah, really a good quality borrower, you're probably going to have your interest rates impacted a little worse because of this. Now, it may impact your interest rates 1/8%, maybe 1/4%, or it might have an impact on your closing costs in the form of discount points or pricing. There's really not a set number here. It kind of varies depending on certain factors like credit score, down payment, and other factors. But I will say that if you're more of the higher tier quality borrower, good credit score, good down payment, not a first-time home buyer, you've owned homes before, you're probably going to see a little bit of an impact here. And it's something that's going to be very important that you talk to your loan officer to make sure any of your pre-approval amounts or your estimates are actually updated with any new changes that could be impacted. The last thing you want to have happen is you have a pre-approval letter in hand and you're thinking everything's good. You go to put in an offer only to realize that your numbers shifted, your interest rate's higher, and now you can't qualify for that home. So I would recommend that you talk to your loan officer if you're in that category to see how it may have impacted your pricing or your interest rate. Now on the other side, if you are a home buyer, first-time home buyer, lower down payment, buying a manufactured home, if you fit into that category, you may actually see an improvement now to your interest rates, maybe 1/8%, maybe 1/4% lower, maybe just lower closing costs overall. But the bottom line is it's going to make it a little bit easier to qualify for a home now and give you a better chance of getting that home ownership this year. So again, talk to your loan officer, see if these loan level price adjustments, LLPAs for short, if these loan level price adjustments are going to make an impact, either positive or negative, towards your financing. So there you go. Loan level price adjustments, not very exciting thing to talk about, but hey, it is something that could impact you if you're planning on purchasing a home this year. So talk with your loan officer about it. That's the best thing I can say, rather than getting into all the specifics and the nitty-gritty of what this is going to do, because it does vary depending on your situation. And shoot, just knowing what LLPA stands for is gonna make you sound so much smarter to your friends. Anyway, thanks for joining me this week. Have a great week.